Eric Modwith with the U.S. market analysis for the weekend of August 5th, 6th, and 7th, because it's a long holiday weekend. Hope you guys are enjoying your weekend. Otherwise, to see how markets close on Friday here, Dow down 1.66, NASDAQ down 105, and the S&P 500 was down 1.5. The VIX was up about 8%, and we see that crude oil was down 1.56%. For the week, S&P 500 was down 3.4%. For the week, the NASDAQ was down about 3%. And for the week, we see that the Dow was down 2.25%. Let's take a look at the NASDAQ weekly chart, and we can see here that on the weekly RSI, the line that we were watching for support or break continues to hold. So we're talking about this level here. That green line is right now holding. So as we come to the end of the week, question becomes whether the market can hold and stay above that line on the weekly RSI. If it can do so, that could be good enough to help the market build and probably even show some stability. One of the things we should not forget is, since we are seeing the crossover here between the 13-week moving average undercutting the 34-week moving average, indication there, generally speaking, could be indicating that we might be looking more and more for prices to go down, even though the close was not as low as we thought on Friday. Because if we go back about 3 years ago, you can see this nice crossover between the 13-week moving average and the 34-week moving average. It took a while, but the market went on a good run over the next 2-3 years after that crossover. So even though here we see that the market is showing a crossover between the 13-week moving average and the 34-week moving average, the key, in my opinion, is how the market is going to respond on this weekly support line on the NASDAQ RSI. If that holds, then maybe there's a chance that this market could actually bounce short term. If we take a look at the NASDAQ Daily, we see that the resistance, and one of the reasons why maybe Friday was down is because if you take a look at the top side on the recent daily RSI action, the market had come back and was stalling exactly on that line. So until the market can move above that line, we have to assume that this is still resistance despite the close. So if the market can't move above that declining line of resistance on the daily RSI, it should continue being under some downside threat. So it needs to move above that line if it's to rebuild. One thing we noticed over the last week or so is the market had come back to test the previous break level. So if you take this level here, which was a nice entry in the market here, which was sometime early this year, market broke out, that line became support. But once we broke through the line, you can see that the market has been using that for resistance. So we broke through the line here, and we've tried to move above the line, but we failed. So right now we can see, the market, if it's to do well, needs to be back above that previous buy point. So generally speaking, we are looking at a market that has to really do a lot of work to repair the recent damage. We also see here that we have now a downward declining 50-day moving average, which is not good as far as the NASDAQ is concerned. Let's take a look at the Dow Weekly, and we can see here the Dow obviously showing the crossover again between the 13-week moving average and the 34-week moving average. So that's something we're going to see in many markets across the globe, which is generally bearish indication of where the market wants to go. On the Dow Weekly, we are looking at 30.90 or 30.9 to see whether the market can hold above that or stay below that. So as you move below 30.90, you tend to have big drops, which might explain why the market was looking down on Friday, because it was playing around with this threshold of 30.90. So as we go into the new week, how the market responds, if it stays above 30.9 on the weekly RSI, that's good. Otherwise, if it stays below 30.90, that would still indicate bearish action. On the Dow Daily, just like the NASDAQ, one of the reasons why Friday was showing resistance is because, and a down day is because of this resistance line. So clearly, if the market wants to move higher, it does need to take out that resistance line on the recent highs on the Dow Daily. It needs to move above that line of resistance. That's one line, one view. The other view is the back test of the previous support line right there. So you can see what was support has become a sell point. The market broke below that line of support, which was during this big drop, one-day drop here. Since then, we haven't been back to those levels, and now we are looking at this showing double top resistance. So really, if you're looking for a visual cue as to whether you should be bullish or not, in my opinion, you can use this very simple line on the Dow Daily. Draw it like that. So for the Dow to be bullish, it needs to be above that line. Otherwise, anything below that blue line would indicate that the market is still looking to go down. If we take a look at a longer term 9 years worth of weekly data on the Dow, we talked about this last weekend, and it is the fact that we are testing, in my opinion, this nice entry in 2009. Once the market moved above this level, we went on a nice multi-year run as far as the Dow is concerned. So we can draw a line from there, a line we can draw of uniformity right there. So this shows where the market has been bouncing over the last couple of years since the lows of 2009, bouncing nicely on that green line and holding. Even here it held. And so what I'm getting at here is, depending on how things go, if the market can continue holding above the green line, then it has a chance of moving higher. Otherwise, for right now, it looks like we are breaking below that line, and as long as we are below the green line, trading below the green line, this is a different market, one that will not bounce but might actually be looking to continue setting lower lows, because this is where it's been holding support. Right now we are trading below that. Indication is that this is a different market, one that should be sold on any slight move higher. If you take a look at the Dow Hourly, those of us who are watching this line of resistance on the Dow this past week saw this resistance, and it seemed like the market would pull back, which is exactly what we are getting. So the Dow Hourly did show that resistance coming into late, I think Wednesday, maybe Thursday. So resistance continues to be on the Dow, and until the Dow breaks above this obvious line connecting recent hourly RSI highs, until the market can take out this high, we have to assume that this is a market that still is going to struggle. You can also see similar type action if you take a look at the 30-minute chart for the Dow. We came back to the level where, so after this break on the 30-minute, so we broke below here off the highs. We can draw a line from there, which should give us uniformity action. And again, you can check out my uniformity videos on YouTube to understand what I'm talking about. So this line here is where the market came off the highs, and since then it's become resistance for short-term highs in the market. This is where ideally, if you are a short-term trader, you wanted to short the market based on resistance on that line. And so during the week, when the market came back to this level, if you are watching, you knew that there was more than likely a pullback was going to take place right here. So the pullback made sense going into Friday. Right now we are looking at the possibility that this could be support if you draw the line like that on the hourly, on the 30-minute chart, short-term support, and maybe if the market can build on that on the 30-minute chart, it could go on to start rebounding. The only problem is here again we go back to the daily, and the daily, just to keep it simple, is the Dow needs to break out above this line of resistance first and foremost. Otherwise, anything below the blue line is resistance. That's one view, and again, just to rehash it, and I'll discuss this on the S&P 500 daily chart, is this line here. Anything below that line, as we can see here, this became double resistance. Anything below that line still indicates a market that is going to struggle. Take a look at the S&P 500, just like the Dow. So we go through this quickly. There's resistance based on this line here. Backtest failure twice this past week. Okay, and also we see that there's another view just like the Dow. Seems to be some type of resistance if you draw it like that. On the daily, take a look at the S&P 500 hourly, and you can see that it ran into resistance on the top side at the highs of the week, which is there. Similar type action on the 30-minute chart for the S&P 500, just like the Dow. And again, we see that it came back to the previous break level. Right there, which might explain why it was down coming into Friday, because of that resistance. So now we still wait to see whether the weekly can show support. As right now you're looking at the weekly for the S&P 500, it looks like we might be breaking that line. Now the NASDAQ hasn't broken, but the S&P 500 looks like it could break unless it can recapture back above that line. If you take a look at a longer term picture for the S&P 500, about nine years worth of data, you can see that the line it needs to hold above is coming off the lows of 09. This line somewhere here, which is off the lows. Draw a line there, and again, check out my YouTube videos on the subject uniformity. I explain this concept. S&P 500 has been bouncing on this blue line for nice re-entry back into the market over the last 4, 5, 6 years, and now we are looking at this actually becoming a break because it's below the line. So that's the risk, is that this is a break and that we are actually looking at markets that are poised more than likely to be going down. On its weekly chart, about 9 years worth of data, you can see that it needs to hold right there. Why? Because this was a nice entry in early 09. It hasn't looked back since. It generally did struggle here, which was this lows here. Finally moved above the blue line there with support, which was the lows somewhere there, and now it's trying to hold above the blue line. So simply, if it can stay above the blue line, that's good. Otherwise, right now it is showing resistance on that line. And so let's take a look at a narrower view of this, and you can see that it is trading right there, something like that. So the line that should be support, if it continues being resistance, I would suspect that this is going to break down to lower prices. And again, the key for the coming weeks and the bearish signal is to watch out for Apple. If it breaks below that 105 level, that's going to be bearish indication of intention. So because this is a recent weekly closing low, anything below that would suggest that it is probing lower prices in a hurry. Otherwise, the biggest threat to this market is, as we've been talking about, can be seen on the monthlies. We begin by taking a look at the S&P 500, and again, the risk here is that it's already trading at 3-year lows on the monthly RSI, which is bearish. The chance here is that it is moving below 50. As it moves below 50, expect there to be a big drop on a monthly chart. And we see that the MACD, as of right now, one of the MACDs is already at 3-year lows and also moving below zero on the monthly MACD time frame. That's one of the most bearish signals you can see in the market. Also, take a look at the Dow. The Dow has already been doing the same thing, so no need to spend a lot of time on this, but we can see that as of right now, the Dow is also showing the worst sell signals look and feel. So it looks here like it already broke to fresh 3-year lows, which is very bearish. And that's the RSI. The MACD now also below to 3-year lows and also moving below zero. We see that the other MACD, the main MACD, is just now about to move below to 3-year lows, which is very bearish. In conclusions, take a look here at the NASDAQ. Whoop. And the risk here for the NASDAQ, just like the other general markets, is we can see that already. Unfortunately, if you're wanting the market to go higher, is this is already breaking down to fresh 3-year lows. That's not good. MACD is already at fresh 3-year lows. Not good. And also the chance of moving to fresh 3-year lows and below zero. That's a big deal. So I've been saying the risk here is this could get worse. Yes, the market can bounce, but for now it really needs a lot of work to repair recent damage, and looks like the path of least resistance to the downside. Otherwise, for subscribers, be on the lookout for part 2 of this weekend's market analysis video, probably sometime on Sunday or Monday, depends, but I'll send you the email whenever part 2 is ready for your consideration. Eric Muadh@muadh.com. As always, enjoy your weekend. Good luck, peace, and blessings. Oh, EACS.